morning. Happy Friday, everyone. Feel Good Talk fam. So, welcome to Time to Rise and Shine, where we talk about mindset, motivation, and money. My name is Kendra Moore. I am your life insurance and retirement consultant. And this podcast is really for people who are serious about their finances and want to understand how money works and how they can protect their selves financially and establish a financial legacy for their family. So today I'm going to be super quick. In the previous podcast, I talked about building your financial home and the difference between how wealthy people build their financial home that is based on a foundation that includes life insurance, cash, real estate, and then their 401k being, kind of like the last priority thing versus the rest of Americans that really build our financial home on a 401k, on real estate, then cash, then maybe get around to life insurance. And then I showed you how, when the markets kind of crumble, that as they, did a few days ago, then while the rest of America it kind of panics because they lose out on millions of dollars because their foundation is their 401k in real estate. So that gets devalued. And so their whole kind of house comes crumbling down financially. The wealthy people, because they've built their house on assets such as life insurance, then cash, then real estate, that they still have that financial foundation in place no matter how the market performs. So then when the markets crumble, they're able to leverage those assets to purchase the homes that the rest of Americans could not afford. So went into foreclosure, or they're able to purchase assets such as property, such as buying more stocks, more investments, etc., because their financial home is strong. So that's my little 2-minute spill on last week's kind of video. So if you didn't get a chance to see that in full, you can check that out. You can also check out, I did a version on my page, so you can go to my direct page as well, or scroll back to this on this page and find it. All right. So today, since I gave you that general foundation on why life insurance is a very great asset to have and how it helps build your financial home, I thought today I would just take just a few minutes to talk about the different types of life insurance, okay? Because I think there's some misconceptions out there. So I'm going to keep it very simple. And I'm going to, again, attempt to share my screen. I hope you guys are having a good Friday. Hope you've had a good week so far. My week has been crazy busy, but I have to say there's been some wins, some little bit of frustrations, but I got through it. So, and then it ended, well, I guess today's Friday, so technically the week, we'll see how today goes, but I'm happy about today. My son actually is going to his senior prom tomorrow, which is bananas. So that's why I'm a little bit all over the place today, because I'm thinking about all the stuff we need to get done for that. But let's get back to this. All right, so let's talk about the types of life insurance. Okay, so we are going to, I'm going to break it down in 2 or 3 categories. And this can also help you decide what type of life insurance may be best for you. Even if you have current life insurance, maybe you now need to reevaluate what you have and see, does that life insurance meet the same need that you have today? So maybe you bought something 20 years ago or 10 years ago, and now you need to reevaluate. So I'm not saying you need to get rid of it, but maybe you need to add something to it. maybe you need to shift things around a little bit. So that's something, if you have any questions about, feel free to follow up with me after this. And you can just DM me or drop a comment and I'll get back to you. So let's quickly talk about this. So you have two types of life insurance. So you have what's called, this is one that you may have heard of, you have your term life insurance. And then you also have permanent life insurance. Okay. So let's talk about a little bit what the difference is between these two. So the term life insurance basically is you have life insurance for a specific term. So term meaning time period. So using this line, for example, you may have a term life insurance for different time periods. So you may have it for 10 years. A lot of them you may have 10 years. You may have, like a 20-year term. You may have a 30-year term. So it depends on the type of life insurance that you got. So again, we're going to put here, or what you think is best for you. So we have 10-year, I'm trying to copy and paste this over. We may have 20 years, and this may not be all the different insurance carriers may have different year increments, but I'm just using this as an example. So what this essentially means is that at the end of this insurance term, your life insurance goes away. Okay, so it's only covering you for the amount of years that you have. Now, the thing about term life insurance, so for example, like your job, the life insurance on your job is actually term life insurance. At the end of your employment, then that life insurance goes away. Okay, so it's not a permanent life insurance policy. You can also purchase private term life insurance policies. Now, the thing about term life insurance that's good is that term life insurance is actually inexpensive, right? So depending on your age, many factors go into, so you have to sit down, with a life insurance agent and talk to them about it. But generally, depending on your age, your health conditions, etc., term life insurance is relatively less expensive, but you can actually get a lot of money in coverage for cheaper. So that's why people tend to go to term life insurance, because it's like, oh, okay, I can get, $1 million, $2 million worth of coverage for less money. And again, I don't want to give out dollar amounts. It depends on your age, what your health conditions are, etc. But let's say, for someone who is healthy, maybe younger, maybe they can get like $1 million. I'm going to do exactly what I said I wasn't going to do, but these are just examples. Okay. Just examples. I'm not giving you financial guidance for yourself personally. But let's say, for example, you may have someone who is in their 30s that can get $1 million worth of term for like $60 a month. You know what I mean? So that's really great term insurance. It's especially good, let's say, if you are a young adult, you don't have a lot of money to spend. Let's say you have kids, right? You're a young family, you're just starting out, you have kids, you want to protect your family, but you don't have a whole lot of money right now. Term life insurance would be a good option for you to consider. All right. So that's term. Now, the thing with term is that and insurance in general, the older you are, then the price for the life insurance increases. So ideally, you want to get life insurance while you are young so you can get a really great rate and kind of lock in that rate. So that's the benefits of term life insurance. All right. So now let's talk about um, the kind of thing that's not so beneficial with term life insurance. And that is you actually have 98. Oh, that's an ugly font. Let me go back. I don't like that one. 98% of people out outlive their term policy. 98% of people outlive their term policy. Now, that's actually great in terms of, we're glad that people are living longer. They don't have to use their term life insurance. However, at the same time, this is money that you've just been paying out and then you're not getting the return for it. So that's the thing. Most people will outlive their term life insurance. Then if you wait and then you go to renew, then it would be more expensive because now you're older. So that's just something to consider. And again, if you want to learn more about it, we can have more of a conversation. I'm trying not to get too much into the details here. I just want to give you a general outline of it. So again, term life insurance, you purchase it for a specific term. These years are just examples. It depends on, what your needs are. It is cheaper. You can get a lot of coverage for a small amount of money. Great for people who may not have a lot of discretionary income, but they still want to make sure that financial protection is in place for their family. And the only kind of risk there is that more than likely you will outlive your life insurance policy with a term. Okay, so now let's jump over to the permanent life insurance policy. So your permanent life insurance policy, there's different types. I grew up mostly hearing about whole life insurance, which I'm sure a lot of you have as well, right? They always talk about term life insurance and whole life insurance. Well, I didn't even know until I entered the insurance industry that that's just a type of permanent policy. So you have different types of permanent policies. So for example, you do have whole life insurance, and then you also have what's like universal life insurance. And there's some other, categories that fall underneath those. But there's different types of permanent life insurance policies. So the beauty about the permanent policy is that it is with you for the rest of your life. So you have it. It's not these term marks here. It is ongoing. Okay. So you do not outlive your permanent policy. You will have that. So that's great. You don't have to worry about it expiring. You don't have to worry about outliving it. You don't have to worry about renewing it and then having to pay a lot more because now your age at the time that you renew it, like you're older, you don't have to worry about that. So with a permanent policy, you get it, you can lock in the rate for the rest of your life, and that's what you have, okay? Now, the permanent life insurance, it is more expensive than your term life insurance. Why is it more expensive? Well, it's more expensive because now what you're really looking at is you are looking at growing your life insurance policy's cash value. All right. So I'm trying to get a good arrow here. So that's the beauty of the permanent policy. Oh, it's not going to let me turn this. Good. I wanted to turn that money green. All right. So while your permanent life insurance policy for the death benefit that you have here, so this is the payout if something happens to you, that remains the same. You're not getting any cash value from your term life insurance. So that's the second major difference is that it has no cash value. Okay. In terms of growth, when we're thinking about now building a financial legacy. Whereas with permanent life insurance, it is a little bit more expensive, but you are getting the value of now you're thinking about how can I build a legacy, a financial legacy for my family, right? So here we're thinking legacy building. So if you've heard the term like trust fund babies, then that's kind of where this comes from, because what the wealthy people do, and not just wealthy, other people do it as well. I don't want to just say wealthy people, because I feel like one of the issues that we have, especially in the Black and brown community, is we feel like a lot of times that we don't have access to these types of financial tools. We do have access to it. We're just so used to people talking about one type all the time because it's cheaper. And I understand that. And there are times where that completely makes sense and you need that. But we also now need to start thinking about, as we as a community are doing a lot better financially than our ancestors, we need to start thinking about how can we start building financial legacies in our community amongst our families. And so one way that we can do that is through permanent life insurance, because you have your death benefit, but now you're gaining cash value. And again, there's the whole and universal life, and there are different things. That's a conversation that we can have one-on-one to see which one is best for you. But this is a whole nother thing. Now we're getting into, again, legacy building. So this means that you have a death benefit as well, should something happen to you, but cash is growing in that account. What can you do with that cash? Well, perhaps you have a kid that someday is going to go to college, right? That's fresh on my mind because David is graduating soon. So, in a couple of months. So you have college. Maybe you want to start a business, right? So this is something, and you'll need some kind of capital for that. So you can use it to start a business. Maybe you, want to give money away, for your favorite charity, right? So maybe you want to donate to your charity, a church, something like that. I mean, there's all sorts of things that you can do with this. It depends on how it's structured. So that's the thing to keep in mind. Again, it's not a one size fits all type of situation. It is let's find out what's important to you. What is it that you need? What are you thinking about in terms of your future? And then let's design something that fits that need. So these are the two main differences. Now, one thing that kind of goes across, and I hope this is making sense, and I'm sorry I cannot see comments if anybody is commenting since I'm on screen share, but I'll go back through any comments once I end this. But one thing to keep in mind too is that there's a couple of things that are the same between these two policies that a lot of people don't talk about because it is relatively new and not all insurance carriers cover this, okay? But that is the insurance carriers that I work with. In addition to the death benefit, they also provide, and I'm not going to go into details on these 2 points today. I will do that in a future podcast. But living benefits, and you have, oh gosh, I'm blanking. Living benefits and long-term care. So the policies, the carriers that I work with, they offer living benefits and long-term care benefits as well. And this is if you either have a term or a permanent policy. And these are important because these allow you to actually leverage your insurance policy should something happen to you while you are alive. So, gone are the days, when you only use life insurance for when you pass away. You can also leverage it while you are alive in certain situations. So I'll get that'll be a whole separate video, but know that exists as well. Okay, so that's a big value add for life insurance. All right, so let me look. I'm going to look on my phone. Sorry, and let me see if anybody has any questions. If not, I will go ahead and sign off. But again, I wanted to just kind of break down these differences so you can start to look at what may be best for you, right? So what may be best for you. Oh, there you go. Hey, Izzy. Oh, sorry. I cannot see comments while I'm sharing. I love sharing the screen because I feel like, I can explain things better visually. Hopefully you guys feel like I'm explaining it well, but oh, what happened to my comment? Give me a second, y'all. Let me see if I can get back to it. And if not, I will check it. Well, I saw Izzy and somebody else was on. All right. Oh, wait. Maybe getting to it. All right. I'll go back. Sorry. And answer any questions because I don't want to hold you up. But again, if you have any questions about your life insurance, whether you have an existing policy, whether you're thinking about getting life insurance and you want to know which one works best for you, then feel free to reach out to me. I'm happy to have a conversation with you, free of charge, no sales pitch thing. But I do want to make sure that you are in the right, the right policy. Okay. And on that note, you guys have a great rest of your day. Have a good weekend. Make it a great weekend. And take care of yourself. Take care of your finances. And I will see you next week. All right. Take care. Bye.